Really, there aren't any major companies that offer a pure play exposure on nickel. You really have to go and look at more the intermediate level companies. Those companies have performed quite well year to date. In 2019, they are producing nickel, and so any increase in the nickel price is certainly affecting their bottom line on a real-time basis.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near two producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold two companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and resource capital funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSILF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. Greetings and welcome back to Mining Stock Education. I'm Bill Powers. If you'd like to engage the show, you can always reach me at bill@MiningStockEducation.com. Well, there appears to be an increased interest in gold and the gold markets as gold has risen about 20% over the last 3 months. But as I was looking over various commodity charts, I noticed that there was a metal that by a twofold outperformed gold, and that was nickel. Nickel is up about 40% in the last 3 months. It rose from under $5.50 a pound US now to about $7.40 a pound or so. So that's about a 40% rise, where gold only rose 20%. So I reached out to Martin Turenne. He is the president, CEO, and director of FPX Nickel. If you go back in this podcast last October, I interviewed Martin along with Brian Lenny of Junior Stock Review, and we talked about the nickel market in that podcast. You can flip back and listen to that if you want more of Martin's insights. But I asked him to come on today to explain to us what's going on. So Martin, welcome back to the show, and please explain to us, why is nickel up about 40% in the last 3 months?
Yeah, Bill, thanks for having me. So I guess since we last spoke, through the latter part of last year and really through the first 3-4 months of this year, nickel remained tied to its base metal peers, copper and zinc, in price performance. It was slightly outperforming copper and zinc, but was generally in line with those metals. Really, since the beginning of July, we've seen this huge increase in the nickel price, as you mentioned. The main driver of that has been increased speculation in the market that Indonesia, which is actually the largest producer by country of nickel mine supply, may be ready to impose an export ban, which would restrict the ability of miners there to export nickel ore out of country to downstream processors, typically in China. And so if the Indonesians were to follow through on that export ban, then the nickel market would be short of nickel units. And the structural deficit that we've seen in the nickel market over the last few years would be heavily exacerbated, which would potentially have positive implications for the nickel price.
What is the political pressure here, or what's going on politically? Is the U.S. potentially applying pressure on Indonesia to hurt China amidst the trade war, or what's your analysis of the political situation and how it impacts this?
Yeah, I don't think that there's any influence from the trade war on what Indonesia is doing. Indonesia has had a very strong current domestically of resource nationalism, and a push to within the country to maximize the value of resources that are housed within the country. And with respect to mining, that would mean trying to encourage investors and companies to build smelters and other processing capacity within the country. And so several years ago in 2014, the Indonesians imposed an export ban on the export of nickel ore, of unprocessed nickel ore, specifically to induce companies and investors to invest the capital to build those smelters within Indonesia. That export ban was relatively successful in encouraging external investors, primarily Chinese investors and companies, to start to build smelter capacity in Indonesia. And I think the Indonesian government considers the reimposition of that export ban as another lever that it has at its disposal to further encourage capital investment within the country's borders.
So if we could step back and just look at the nickel market from a 30,000 foot view, there's very many savvy listeners that are listening to us right now on this podcast, but there's also people that are very unfamiliar with the nickel market. Nickel's been bouncing between $5 and $6 US for most of this year before it shot up to about $7.40, as I mentioned at the introduction. But could you take us back about 15 years, Martin, and help us to understand where the price of nickel is now relative to where it's been in the last 15 years?
Sure. So if you go back to sort of the middle part of the last decade, you had the Chinese super cycle really kicking into gear. And among the major metals, nickel probably had the most dramatic increase to the upside. Right in the middle of that Chinese super cycle, the nickel price went up to about $24 a pound. As miners do what they do, when as the commodity price goes up, particularly when it goes up that dramatically, it tends to induce a lot of new production to come online. And that's what we saw in the period between 2010 and 2012. And that led to the nickel market being in huge oversupply for about 5 years between 2010 and 2015. And that macroeconomic theory would dictate that the nickel price would go down in those circumstances, and that's indeed what happened. So the nickel price went from a high of $24 a pound to a low of about $3.50 in late 2015 and early 2016. Since the beginning of 2016, the dynamic has shifted 180 degrees. The nickel market has been in structural deficit since the beginning of 2016. And so demand is exceeding supply by a considerable margin since that point every year. And we continue to see that here in 2019. And so there was, in that prior period between 2010 and 2015, a large buildup of inventories on the LME and other warehouses. And those inventories have been steadily being drawn down here since the beginning of 2016 as the market has been in deficit. And so at some point in the not too distant future, the nickel market will become, I think in most people's view, truly tight. And that's where we could see potential for further escalation in the nickel price.
Some have said the nickel market is a little harder to analyze than, let's say, the gold market because more than half of the inventory is not reported on the exchanges. Do you agree with that?
Yes, I think that's absolutely the case. There's, and it's true for copper and zinc as well. As these markets move, of course, you have reported inventories. Those would be typically the LME and the Shanghai reported figures. But then there will always be nickel units that are being stored in private warehouses that are not reported. And those volumes can be considerable. And so I think it's safe to say that, depending on inventory volumes that are reported for these major base metals, oftentimes there can be just as much, if not more, of these base metals stored in private warehouses. So it does lend a certain opaque nature to the ability to model and to come up with a thesis on these metals.
With that bear market ending in 2015, talk about what that did to the nickel equities.
Yeah, so the nickel equities, were really severely beaten up, really through the down period of the nickel price. And what you saw is actually a lot of companies that were formerly nickel companies rebranded and became other focused on other metals or in other sectors. And so there's been a dramatic decline, quite simply, just in the number of nickel equities out there, particularly in the junior space. Since the nickel price has started to go up, particularly this year, we've seen a healthy response in the price of the nickel-focused intermediary companies. Really, there aren't any major companies that offer a pure play exposure on nickel. You really have to go and look at more of the intermediate level companies. Those companies have performed quite well year to date in 2019. They are producing nickel, and so any increase in the nickel price is certainly affecting their bottom line on a real-time basis. But I would say that the condition or the circumstances for junior companies or pre-production companies is somewhat different. I guess in that way, it's somewhat similar to what we're seeing in the gold market right now, where the gold price is doing well. The gold majors are certainly gaining quite nicely, but that performance hasn't really trickled down into the juniors yet. And I think it's very much the same case for the nickel market.
When mining companies, make the case for their investment thesis, it's inextricably tied to the underlying commodity and the future demand for that commodity. Can you make the case for a rising nickel price apart from the electrical vehicle revolution? Because that often comes through in many nickel companies' presentation, the EV demand that's expected, the dramatic rise from where we're at today.
Yeah, the EV demand component for nickel, it's a great part of the narrative, and certainly we see that as well. A lot of nickel companies really pushing that aspect of the story, and it is a narrative that I think carries a lot of sway with particularly sort of generalist investors. Really, the workhorse for nickel demand, though, remains stainless steel. Stainless represents about 70% of nickel consumption, whereas the batteries today are only about 3 to 4%. Now, the batteries will certainly take up more nickel demand over time. I guess the simple point I would make is that even if there were no electric vehicle battery demand, the nickel market would likely still be in deficit, and there would still be a bull case for the nickel price based simply on continued strong and robust demand for stainless steel, combined with a real constraint in supply growth for nickel, particularly in light of several years of very low nickel prices. So the EV battery demand is going to be substantial, but in terms of the bull thesis, I think it's the cherry on top.
Your company, FPX Nickel, is one of the more leveraged plays to nickel. I'm looking here on your presentation where it shows your share price performance relative to the price of nickel. Your key project is the Baptiste deposit on your Dakar Nickel District. You released some information on that not too long ago, about 10 days ago. Please provide an overview of what's going on at this project and what's the significance of your most recent press release.
Sure. So Baptiste is a very large-scale deposit. There's over 5 billion pounds of nickel in the indicated category, and a few 100 million more pounds of nickel in the inferred category. So it's a very large deposit. It sits in the middle of central BC, very close to a railway, very close to some other large mining operations. The project sits with an established resource and PEA. And that PEA was done in 2013 in collaboration with a former joint venture partner of ours. We hold the project now on a 100% basis, and our work over the last couple of years has been focused on optimization of every aspect of the project, from expanding the resource, particularly higher grade area of the resource via the drill bit, market analysis to understand where and for what price we'll sell our nickel product, and most recently, a real focus on optimization of metallurgy. In short, we've achieved much higher rates of recovery of the nickel compared to what was assumed in the 2013 PEA, about 4 to 5% higher recoveries, which is very significant, towards the production of a significantly higher grade nickel product. So the nickel concentrate we're producing now consistently grades around 65% nickel versus 13% in the previous study, and that we believe is going to translate into a much higher value product, given the higher purity of nickel in that product, and also lead to a dramatic reduction in the estimated transport cost to take that product to market. The next steps for us are sort of twofold. One is we are looking at the leachability of this nickel concentrate to see if we have a product that is potentially a feedstock into ultimately the production of nickel sulfate, which is the chemical that goes into electric vehicle batteries. It would be nice to demonstrate, I think, that on a resource this large, that the project has the ability and flexibility from a strategic standpoint to produce nickel either for stainless or for the growing EV market. The other piece of work is with respect to we're now producing an iron ore byproduct, and so we want to understand what the potential market for that byproduct would be, and fold that into the economics at some point, which has not yet been contemplated for the project, and certainly was not included in the previous economic study.
So you're doing the metallurgical work in these studies, moving towards your pre-feasibility study? That would be the next logical step?
The next logical step is likely to be an updated PEA, simply to show the market that this is a project that is very robust and frankly far more robust than the 2013 PEA suggested. 2013 PEA suggested this project needs a nickel price in excess of $9 a pound to be, feasible and hit the kind of minimum hurdle rates that would be required for a project of this size. And we're quite confident that a new PEA would show that the project hits those hurdle rates at a much lower nickel price based on the work that we've already done to date.
Do you have an NPV calculated at the current price of nickel?
We do not. For our internal purposes, we keep kind of a study kind of live, but it's not something we're able to put into the public domain as of yet.
Okay, and Martin, moving forward, what does the treasury look like for the company?
Yeah, so our cash and working capital is in the area of just under $1 million Canadian. We will probably end 2019 with around $700,000 in the bank or so. We have maintained a very, very modest burn rate over the last couple of years, have done desktop work and metallurgical work that's added a lot of value for low cost. And so based on our current cash position, we estimate that we've got enough funds to last us through likely to the fourth quarter of 2020.
All right. Well, you've been listening to Martin Turenne, the CEO and president and director of FPX Nickel Corp. You can find more information about Martin's company at FPXNickel.com. Company trades on the TSX-V under the ticker FPX. Martin, I appreciate your insights. Thanks for taking the time and coming on the show.
Thanks, Bill. Much appreciated.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.